Price and trading. This is something that I get asked a lot about and is kind of misunderstood by a lot of traders. So we've got three charts up here, and this is just a real talk about trading. For three charts, one of euro, one of Apple stock, and one of gold. All different time frames, that's irrelevant right now. But price, if you ask a lot of traders, you'll get a lot of different ideas on exactly what price is. Some traders will say it's the last price that someone was willing to pay for a stock, futures, or Forex, or whatever you're talking about trading. And something that's a bit of a problem about that, we'll look at gold for this example. This chart of gold, we're ranging from a long time, all the way looking back at 2012. The price of gold was upwards of $17.97. And right now, the price of gold is $1299.8. Now, the gold is the exact same thing it was back in 2013, 2014, all the way up till now. And the problem about the price of gold being the last price that someone was willing to trade, and that being the definition of price, is the fact that right now, you can take it and say that if I discover, or if the guy down the street discovered a way to make gold out of common metals, or through mixing a few different chemicals together, he's able to create gold. I have 100 ounces of gold. All of a sudden, they can produce it for dirt cheap down the street. I'm not saying this is actually going to happen. Gold is a flight to safety for a reason. But this is the idea behind what price actually is. So all of a sudden, the guy down the street can start making as much gold as he wants. Now, the 100 ounces of gold that I have, all of a sudden, I last paid for that around the 1,300 mark. Now, all of a sudden, is the gold that I have, is the 100 ounces that I have worth $1,300 an ounce? I don't think so. I think that if you can get gold for cheaper, you're going to pay a whole lot less for it. So the price is not actually the last price that you paid. Another definition you're going to hear is price is the agreement between buyers and sellers. Now, this is getting closer to the truth because all prices were an agreement between buyers and sellers. When we look at the Apple chart here, every time the price moved up or down or found a high point or found a low point in this chart, there was an agreement on price between a buyer and a seller. But the problem is the current price right now, what the stock is actually worth right now, is not represented by this on the market, because what will happen in 1 second from now or 10 minutes from now is not represented properly right now on the chart as price. The final definition that I hear quite often, and the one that I personally believe and use, is that price is what the next buyer is willing to pay for whatever stock. Forex, cross, or futures market, it doesn't matter. Say, look at this Apple chart. In the last 3, 4, 5, in the last week or so, the market's been going down. This particular stock has been going down. The price is 100% dictated right now by what the next person is willing to pay. So nothing has changed. If we look at Apple over this whole period of time, it's still the same company. I mean, we're not talking about splits in stock or anything like that. We're talking about the actual just price of a stock right here. The actual price of it doesn't reflect the company in many ways. Now, it reflects futures earnings, what might happen, this giant band of all the things that may happen with a company or whatever you're talking about trading. But the actual price is completely determined on what the next person is willing to pay. If all of a sudden someone says that terrible news happens and they find out that all Apple products give you cancer, the next person that wants to purchase an Apple stock, I guarantee you won't be paying, $153 right now. He'll be willing to pay a whole lot less because he knows there's going to be a lot of problems involved. Price is only what the next person in line is willing to pay. It's this intersection between buyers and sellers and the demand curve for how much demand there is and how much availability of this particular product, how much availability there is. It's this weird intersection where the two meet, and then you have this agreement between these two bodies to buy and sell whatever commodity, futures, forex, cross, or stock you're talking about. Price is a really interesting subject, and it's completely separate from value, which is what we'll talk about next before we can combine these two subjects.
Do you have any trading topics that you'd like covered? Leave a comment below and we can dive deeper into all things trading. If you just enjoyed the video, please subscribe or leave a like.